Hey everyone, this is Dan with Theta Trend. Today is Wednesday, January 27th, 2016. It's about 2:30 p.m. here or so Mountain Time. The market closed a half hour ago. So today what we're looking at here on this chart is a weekly chart of the Russell 2000, the RUT. And what we've seen is some selling coming into the year. I think everybody's pretty well aware of that. We started the year up here at about 1135. We're down around 1002 or so, 1002-ish. And what we've seen is the market's kind of come into this 1000-ish area, which is an even number. And of course, humans tend to like even numbers, and the market tends to stop and reverse at even numbers and things of that nature. But we found a little bit of support there, at least for the time being. And what it seems like is we're seeing some buyers and sellers kind of fighting it out around this level. And for me, that kind of indicates that maybe we're at least going to have a little bit of the slowing in the downtrend here for the time being. And there's not any real reason to expect that the market's going to turn sharply higher or sharply lower, at least immediately. It does seem like there's a lot of complacency in general, just in terms of volatility and the change of volatility and everything like that. But the market could certainly surprise everybody. And if the market was to surprise everybody, I think we'd see a pretty significant shift in volatility. But we haven't seen that just yet. So let's drop down to the daily time frame, and there's this kind of this higher and lower thing going on every single day. We see the market moving up higher, then it turns around and hits lower, back higher, back lower, and so it's kind of this whippy churning back and forth, if you will. And the market's not really going anywhere. It doesn't have any true direction at the moment, but it's just trying to figure out where it is. And after this big move lower, I think it's going to take a little bit of time and a little bit of just price action to resolve itself either to the upside or to the downside. But for the time being, there isn't a strong direction in the market following this move down. And that can certainly change at any time, but it is what it seems like we're seeing right now. And just to point out here, for the March CIB that we'll take a look at in a minute, the blue line here is our current expiration break even, which is around 1025. And on the downside, the expiration break even is down around 938-ish or so. The downside roll point's a little bit ahead of that. It's about 945, but we have quite a ways to get down there. You know, if we drop back out to the weekly chart, 945-ish is way down here. So the market would really need to push all the way down, make new lows, and then we'd be taking the position off with the intention of rolling it lower. But we have some room there. We've been a little bit closer up here on the upside, and we keep nudging right up to this upside adjustment point. Let's drop back down. Now we're at the 65-minute time frame. We keep nudging up against this adjustment point, which is right here at about 1025, but we're not quite making it there. And if we do make it up to this level, push up and above, we'll make the adjustment. That's going to push our expiration break even out into kind of in this area, which is the top of the box that we've been watching. But for the time being, the market hasn't really had the strength and the energy to get back up and above this 1020-ish level. Let's just call it 1020-ish. You know, we've poked up and over it a couple of times here and here, but we really haven't had any follow through to take it up to 1030, 1035, anything like that. And at the same time today, we had the Fed come out, and after the Fed spoke, the market sold off, but we still didn't come down to violate this kind of 995-ish level that we've been watching. And so we're saying a break of this 995-ish level could take us down into about 985-ish, 983, but we haven't seen that either. So we're just kind of in this directionless chop at the moment, and that can certainly change, but for the time being, it hasn't changed. And as premium sellers, that's okay. So let's take a look. This is a picture of the March CIB, and we're down to, I think, 50 days to expiration. Yeah, so we have 50 days to expiration right now. And I think this one froze for a minute there. We have the 925, 980, 1035 RUT butterfly, and the market closed here today at about 1002 and change. And we have an open profit now of about $20. Delta is negative 139. Gamma's negative 4, $7 worth of theta, negative 20 vega. So we're in a very safe position. There's nothing wrong with this trade. It's just kind of chugging along. The t+0 line is starting to steepen a little bit. It's starting to come up as this butterfly begins to decay, but we're still pretty early in the game, and so it hasn't really come up all that much just yet. We were up in here this morning, up around 1020 or so, and the position was still looking good. There's not a lot to be concerned about at this point in the trade. Really, the only thing that would be detrimental would be some sort of catastrophic gap down to, say, 900-ish or so, something like that overnight. That would hurt the trade. But aside from that, we're in a good position. evaluating the upside adjustment point, that we did yesterday, we looked at what would happen if we traded up here into about 1025. That was sort of going to be the point at which we were going to make an upside adjustment. We didn't quite get there today. We came to about 1020, and from there we just backed off into the body of the butterfly. So for the time being, there isn't anything to do here other than just see how things play out. The market could certainly turn around tomorrow and head the other direction and then head higher still, but we just don't know what will happen. So we will wait and see. If you have any questions, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.